This is not financial or investment advice. The information provided is for educational and entertainment purposes only. Please always do your own research and consult with a licensed financial advisor before making any investment decisions. Thank you, guys.
Hello, everybody. Welcome back. And the word of the day is tariffs. Very exciting. I think I've heard this word more in these past couple months than I have in my entire life. But let's get into it. I made a video about this 4 days ago, and it's already I don't want to say irrelevant, it still holds up, but so much has changed since then. So it's time for a part 2. Tariffs and how to make money off of what is happening. So basically, the most important thing is that there is a 90-day pause on pretty much all the tariffs that the United States placed against other countries, with the main exception being China, which is now at 125% tariff. So this is going to massively impact our supply chain and our imports from China, and also our domestic manufacturing. I mean, everything is going to have to change to accommodate the demand that we have for a lot of these products that we import from China, but can no longer import while being cost effective. So we're gonna go over the key imports from China. And this is from the US Census Bureau. So last year it was at $438 billion that we imported, almost $500 billion. This year, January, February, it's gonna be interesting to see when this is updated and kind of just watch these imports fall off a cliff, I'd imagine, in around April to May. So that's going to be pretty crazy. But we import a lot of goods from China. You can see here that our major imports are smartphones, portable computers, lithium-ion batteries, toys, video games, consoles. I don't really care about most of these on these lists except for smartphones and lithium-ion batteries. Lithium-ion batteries, as I'm sure all of you guys know, are pretty important to like everything we do nowadays. So I am going to be looking at every single company that is going to be doing lithium mining domestically in America, and I'm going to start looking at the real estate markets surrounding those areas and see if any of them are good investment opportunities. I know that in the case for smartphones, that Apple has already said that they were going to be building a factory in the United States. I don't know when or where that is, but it's probably worth taking a look at that local market and seeing how the Apple jobs will affect the real estate market there. How do you know if it's going to affect a market? So if the jobs coming in are higher than the median individual income for that area, for that county, that's a good sign for potential upside in some of these real estate markets. Also, if it is a community with not a lot of people, let's say like in the Taylor, Texas scenario in my previous tariff video, there were 17,000 people and 4,500 jobs are going to be coming into that market. You don't need to be an economics master to understand that the demand is going to greatly outweigh the supply in a situation like Taylor, Texas. The third one that I'm going to care about is pharmaceuticals. The current administration has made it very clear that they view pharmaceuticals and producing pharmaceuticals domestically as a very big point of national security. So I will be definitely keeping up with which companies are going to be producing stuff like that domestically. And like I said earlier, start looking at the markets that they're going to be doing that in. So these are some things that you should look at when evaluating markets. You want to look at the proximity to the manufacturing hubs that either already exist or are being built. I would focus more on the latter. The ones that aren't built yet are going to have much more opportunity as you probably have less competition with investors. So locations near existing industrial centers, or where there's a workforce already ready to go. And the next thing I'm gonna start looking at is state and local government incentives. So federal, state, and local government incentives, areas where governments are offering tax breaks or incentives like subsidies for manufacturers to set up shop. A good example of this is Ohio, south of Columbus, like Pickerington, Ohio. I made a whole video on that, how US-China tensions are impacting Ohio's real estate market. They're getting loads of government subsidies, loads of state tax breaks, just loads of incentives to build manufacturing hubs over there. and that's going to greatly impact the real estate markets. And then third, you want to look at logistics and transportation. Places close to major highways, railroads, and ports that make shipping easier. I'm also going to be looking at this because obviously places that are close to highways, shipping ports, and railroads are usually higher density populations, and the markets are a little more secure there, instead of just some place in the middle of nowhere that is solely reliant on whatever industry is coming in. You want some diversification. I typically try to stay away from looking at markets that one sector is responsible for all their entire economy, because if that sector leaves, or if that sector has a bad year, or if the government decides to stop subsidizing, that manufacturing plant or whatever, it will not be good. So this will lead to booms in both commercial and residential markets as workers move into the area. So you could invest by buying a single family residence and renting it out near one of these places to ideally one of these workers that would be coming in. Or you could buy a commercial property that has a small restaurant that is likely just going to see more people as the population increases and as the economy expands. So another tip, it's kind of cliche, but follow the money. Keep an eye out on massive developers that are going to start building planned communities or apartment complexes or mixed-use commercial. These guys have entire teams of analysts. They see stuff way before we do. And if you see these people pouring money into a certain area, that might be a good sign that you should maybe do some research on that area. There is a caveat to this though. I would say be careful of looking at places that lots of people are investing in. So an example of this would be like Florida or Austin, Texas. Those markets already happened, right? They've already happened. We actually saw in Austin how there was a massive real estate boom, and then it kind of came down, flattened out a bit, and then it'll start to, increase again. By the time that the news or that everybody's talking about a certain real estate market, I would say forget about it. It's too late, and start looking for the next opportunity, because you're going to jump in with all the other investors, and you're likely going to be buying at a premium price instead of at a discounted price. So to recap, as tariffs push US companies to produce more domestically, real estate near these new factories is likely to rise in value. You guys should definitely start researching these areas and start putting lists together of companies that are going to be producing, like lithium mining or pharmaceutical manufacturing or smartphone manufacturing. And that's pretty much it, guys. I just wanted to give a little update, and hopefully I don't have to make another one of these videos in 5 days, but yeah, some pretty interesting stuff. There's a lot of change, but with a lot of change, there's a lot of opportunity. So like, comment, subscribe, share your thoughts down below. Seriously, I'd love to get your guys' opinion on this stuff. And anything you comment, if you have questions about real estate, I really will just make a video on your comments. So reach out. And thanks, guys. Talk to you later.